Have you ever wondered what business turnover really means and why it matters so much for companies? Let's break it down in simple terms. Business turnover is the total revenue a company generates from its normal operations during a specific period, like a quarter or a year. It's the total income from sales before expenses. There are two main types of turnover. Gross turnover is the total sales, including returns and discounts. Net turnover is what's left after subtracting those, giving you a clearer picture of actual revenue. For example, if your company earns $500,000 in sales, but has $50,000 in returns and $10,000 in discounts, your net turnover is $440,000. Simple, right? Now, why is turnover so important? It reflects cash flow. High turnover means money keeps moving through the business, and it shows profitability trends and business valuation. Turnover varies by industry. Retail often has high turnover with smaller margins, while manufacturing and tech may have steadier rates. So, how can you improve your business turnover? Use smart marketing and SEO, focus on customer retention, adopt competitive pricing, and streamline operations with technology. In short, turnover is more than just a number. It's a powerful indicator of your business health and future growth potential. By understanding and improving it, you can ensure long-term success. For more insights on business and growth strategies, visit HUMANITYUAPD.com.